The Austrian theory postulates that entrepreneurs are tricked or fooled by government-engineered increases in the money supply. Here's a simple example of how the scenario runs. The central bank inflates the supply of money. The real interest rate falls because there are more funds to be lent out. As the real interest rate falls, entrepreneurs borrow more. They undertake longer and more ambitious projects. And eventually, according to the Austrian theory, those longer and more ambitious projects cannot be sustained. They turn a loss rather than a profit, and eventually the boom becomes a bust. To consider a specific example, it's been argued by many Austrians that the housing bubble was in fact an illustration of Austrian business cycle theory. In the years 2001 to 2004, the Fed really was somewhat loose with credit. Nominal interest rates were quite low. There was a housing bubble. People borrowed a lot more money. They borrowed more than they should have. People thought the good conditions, the low interest rates on mortgages, the easy availability of credit, the rising home prices would continue forever. That wasn't the case. Eventually the bubble burst, these trends were reversed, and we had a lot of long-term construction projects and housing and mortgage decisions that turned out, in retrospect, to have been big mistakes. Austrians propose some different remedies for stopping the problem in the first place. To stop the problem in the first place, Austrians have argued we should either have a gold standard or tighter money or some kind of monetary rule. The belief is it would then be harder to fool entrepreneurs because in terms of monetary conditions, it is believed they would be more stable, or at least entrepreneurs would know what to expect. Austrians and Keynesians give very different readings of the 1920s and the subsequent Great Depression. According to a lot of Keynesians and also monetarists, there's some critical negative period between 1929 and 1932, and if only we had stopped aggregate demand from contracting so radically, we would have had a much stronger economy. The Austrian view is different. According to the Austrians, there was a lot of loose money and monetary expansion in the 1920s. Entrepreneurs took on projects which were too ambitious, and once those longer-term projects are in place, Austrians often believe there's not any way you can back out of the jam you're in, that a lot of those investments will turn bad. Now, on this question, I'm not actually so much of an Austrian when it comes to the Great Depression, but that's one way of thinking about the difference between the two points of view. Austrians locate the problem more in a kind of original sin of inflation, which once it has been committed, it's very hard to get out of. Monetarists and Keynesians tend to think that if you can boost aggregate demand or maintain aggregate demand at the proverbial last minute, that you'll actually succeed in making the cycle a much less severe one. Strengths and weaknesses of the Austrian theory, what are they? I think one strength is that we do see a lot of credit bubbles in history, and on average those credit bubbles are associated with periods of loose monetary policy. The Austrian theory picks up some important part of this story. There is too much credit put on the market, entrepreneurs are fooled, and this is one factor that contributes to making for a recession or depression. But the Austrian theory also has some weaknesses. One is that for a theory which stresses the virtues of the market, it assumes that entrepreneurs are tricked rather easily. So say there's some inflation or an increase in credit. An entrepreneur doesn't have to be a genius to say, hey, wait a minute, there's been some inflation. I saw this on Fox News, I read about it in the Wall Street Journal. Maybe I shouldn't overexpand my business. There's some inflation, maybe now's time to just be a little more cautious. It's also the case that, looking back in history, a lot of business cycles are caused by monetary contractions and not by the previous expansion. So there's an awful lot of cases where the Austrian theory wouldn't even potentially apply.